Hi, you're watching ETMarkets live stream. I'm Neha Vashisht. Welcome to a brand new episode of ET Market Wrap where we discuss what happened this week and what can we expect the coming week. We have with us today Mr. Kranthi Bathini, equity strategist at Wealth Mills Securities. Thank you so much, Mr. Kranthi, for taking out time and joining us today on ET Markets Live.
Thank you, Neha. Thanks for your invitation and thanks for making me to share my market views with all the viewers of ET Markets and with you.
Well, the pleasure is all mine. So let's get to the market wrap. Let's first start with the RBI. So RBI has cut the repo rate by 25 BPS. What does it mean for different sectors in India and how is it set to affect things around?
Yeah, Neha, always any reduction of interest rates parameters are concerned. It's always positive for equity markets by and large. And it has come like a surprising move. There was a consensus view that RBI is going to reduce the 25 basis points interest because there was a pause of reduction of interest rate cycle earlier in the last two policy meetings were concerned. But
Hmm.
the depreciation of rupee has been an overhang on the interest rate reduction with respect to the key monetary parameters are concerned. That's what some kind of a skittiness was there in the market in the medium to short term. But as one part of the view, this MPC was a pro-growth MPC. So that was the reason the MPC unanimously, there was no other discussion in terms of they unilaterally, unanimously, they
Hmm.
voted for 25 basis points reduction because the global environment also very uncertain at this point of time, and there are also overhang on the global growth prospects for concern. That was the reason for the MPC to go ahead with a 25 basis point rate cut at this point of time, which is positive for the market. And market seems to be priced in, and it could able to hold on to the range of 26,000 level. That's what we are finding at this point of time. By and large, any rate cut decision is definitely is a positive for overall equity markets, especially for the banking and financial services.
All right. Let's also talk about what's happening in the markets overall. So there's low inflation right now. There is a weaker rupee. Rupee is depreciating every single day, and there is a situation where there is high growth. So, what are the macro trends saying for India right now?
Especially Neha, yeah, rupee depreciation is a one of the key concern at this point of time. We had a strong macros. The domestic macros are quite strong, but whereas if you look at the overall scenario, the currency is getting depreciated. If you see the tendency of Indian rupee on a historical basis, longer term, rupee is getting depreciated always. Last 10 years, if you see the trend, the rupee was depreciated around 35% last 10 years. So
Hmm.
it is a new normal country like India, which is emerging.
Okay.
So the currency tend to depreciate. It also creates some kind of a pressure on the inflation. But one good thing that's taking place is the crude oil prices, where our imports always where we spend more dollars on imports. We have a favorable environment with respect to the reduction of global stable crude oil prices are concerned, which is helping the market. Otherwise, it can be a double whammy for India, depreciating rupee, and if the import bill goes up, that can
Hmm.
create extra pressure. But where the dollar demand is coming is the continuous foreign portfolio selling. That's where the rupee is getting depreciated in the medium to short term. Every day, foreign portfolio investors, they have been selling in Indian equity markets around a tune of 2 to 3,000 crores. That has been creating more pressure on Indian rupee.
Hmm.
Till today, YTD, if you see, foreign portfolio investors, they sold around 2,80,000 crores. Last
Hmm.
1 year, they sold around 3 lakh crores of rupees. They sold from the equity markets. What is the reason? The reason can be there are multiple reasons at this point of time. We all know the trade deal is a overhang, and our
Yeah.
exports are a little bit stagnant at this point of time, despite the
Hmm.
strong GDP data that has surprised the market with the 8.20. But foreign portfolio investors are trying to be on sidelines at this point of time. That's creating the pressure at this point of time. Uh, but despite of all these worries, the RBI have taken a consensus view of 25 basis points, which is positive
Hmm.
in the medium to short term.
All right. Let's also come to the stock markets. The markets were mostly on a downward direction this week. We did see some kind of recovery on Thursday and maybe today also. We'll get to know by the end of our session. But what can we expect now from the markets?
One thing, Neha, we are in a positive territory as per the headline indices are concerned. Nifty is trending at 26,000, which is quite positive for the headline indices, large cap universe is concerned. But where the pain lies in the market right now is the mid and small cap universe. If you see the trend of the market, last
Hmm.
14 months, the headline indices is in a consolidation phase. 14 months back, we were at 26,000 level. Today also, the headline indices is at 26,000 level. But during this phase, the mid and small cap have outperformed. But last couple of months have been, especially last 1 month have been mid and small cap space. We are witnessing some kind of a profit booking and a consolidation in the mid and small cap space. Normally, the tendency of the market is when the large cap outperforms, uh, the mid and small cap, they tend to be in a consolidation phase, and they try to, once the market reaches it peaks, the mid and small cap, they are going to join the party. But this
Hmm.
time, contrary to this popular view, last 14 months, the large cap headline indices have been in consolidation phase, but selective mid caps and very selective stock specific action was there in the market. Mid and small caps tend to outperform, they were outperforming the market. But now, right now, the headline indices is in a positive territory, whereas mid and small cap, they are witnessing a profit booking. One thing is the lot of liquidity that has sustained these mid and small caps. Right now, what we are witnessing is a lot of money has been getting channelized into the primary market at this point of time. There are a lot of IPOs have been lined up. So what we witnessed is this money is getting channelized into the IPO market, primary market in the medium to short
Hmm.
term. That's what we are witnessing. So the action is, by and large, the headline indices, the Nifty is holding the range of 26,000 level, which is crucial at this point of time. But the pain lies in the mid and small cap, and for a retail investors, majority of their portfolios have the major exposure towards the mid and small cap. That's
Mid and
what
small
the
cap.
pain is right now. You might be seeing the markets are heading towards a new high, whereas the portfolios are underperforming. This is the tendency normally everybody observing at this point of time in the market.
Hmm.
So we need to look the Nifty sustaining 26,000 level, and the greater question is when the mid and small cap are going to join the party.
Absolutely. Let's also talk about the markets from a broader perspective. The markets seem to be very confusing right now. Nobody knows what to expect from the markets because one day, there is something going on, then there are global issues, then we have the rupee issue, then we have IPOs. So a lot is happening. So what can we expect in the near term, and especially when we talk about the next week? And what are the levels to watch out for?
One thing, Neha, coming to the levels, first thing, Nifty holding the level of 26,000, that is extremely
Hmm.
crucial at this point of time. If Nifty drift down the range of 26,000, there can be some selling pressure, can further selling pressure can emerge. A lot of money is getting channelized in the medium to short term, as I mentioned, into the
Hmm.
primary market. The levels to watch out this week is Nifty holding on to the range of 25,800 at the lower side, 850, 800. This is the crucial support zone. And at the upside is concerned, there is a strong resistance around 26,250. That's the range. So the market is expected to be in this range of 500 points range of Nifty. That's where the headline indices are heading in the medium to short term.
Hmm.
And we have the major news, a lot of anticipation, buzz around the rate cut. We got the rate cut,
Hmm.
25 basis point rate cut. And just further news is we are in the month of December. So a lot of policy action, and the government of India started consultation. The finance ministry started consultation with the stakeholders with respect to the budget preparations are concerned. So the budget is going to be the bigger direction for the market.
Hmm.
So right now, President Putin is also there in India today. So
Yeah.
greater news with respect to the defense deals are concerned. That's where the focus is going to be.
Hmm.
But when, as you rightly mentioned, there is a confusion in the market. Markets are in a uncharted territory. When the market breadth, because mid and small cap universe is a larger universe, the large cap is just the Nifty is 50, and next greater universe is the mid and small cap. That's where the
Hmm.
inaction is there right now. Lull is there in the market at this point of time. But by and large, the liquidity is slightly drying up in the mid and small cap space. That's what
Yeah.
the concern at this point of time. If we can get the liquidity into this mid and small cap space, we can see the market breadth to improve in the medium to short term.
Right. But would you suggest investors, retail investors who have invested in mid and small caps from a long time, and most of them are taking out money right now, but what would be your suggestion to them in terms of these two areas?
Neha, in the medium to short term, the market territory and market positioning is definitely Indian markets have been buy on dips and sell on rally kind of a market. If you see,
Hmm.
I'll just give you small example. Okay, if you buy any stock, fundamentally strong stock, if you are buying at
Hmm.
100 rupees, the stock has been rallying to 110, 120, you're making 20% decent return. But if you have a tendency of long-term investing in these markets,
Hmm.
thinking that I'm going to hold the stock for a longer term, but due to the knee-jerk reaction and volatility of the market, nature of the market at this point of time is you are witnessing the same stock which is at a 20% profit, you're witnessing at
Hmm.
90 and 80. So the greater
Yeah.
question is, are you ready to buy the same stock which was at 120 now at 100, at 80 rupees?
Hmm.
One thing is you have the constant cash flows, or if you have the conviction to buy the same stock at 80. This is the greater
Hmm.
question for every investor. So the tendency of the market texture at this point of time is buy on dips and sell on rally kind of a tendency is we are witnessing, especially in the mid and small cap space at this point of time. So the investors can hold on if the fundamentals are intact. They can hold on to their positions and
Hmm.
look at the last quarterly earnings and get into the earnings con calls of these companies. If there is a good outlook, sustainability of earnings, definitely one can buy these stocks at dips for a medium to longer term perspective.
All right. Well, this marks the end of our segment for today. Thank you so much, Mr. Kranti, for taking our time and joining us today on ET Markets Live.
Thank you, Neha. It's always my pleasure to share my views with you and with all the viewers.
Thank you so much. Thank you, everyone, for joining us today. Thank you.